Hey, I found the eclipse, but I'm still looking for the blockchain. Kieren James Lubin is here live in the lab to tell us all about it. Coming up now. Hi, I'm Keith Bilous, and this is Live in the Lab. All right. A little bit of weirdness in front of the camera there for anybody who's watching. So I'm like, hey, where's the button? Where's the button? I can't get it going. How did you go viral on TikTok? You were on America's Got Talent. How much did you get paid to be on AGT? Oh, you didn't get paid. Keith and Steve here in Live in the Lab.
You're a great interviewer. I love it.
48 miles, 48 hours. And not just once. You ain't seen nothing yet. I hit 50 last time, and I'm like, yeah, things are a little different than they were 10 years ago. So trust me, things are to keep. You have no time for the BS that much of society seems to put on the table. Why is that? Like, what you're talking about is real right now. There's just no bullshit here, but it's just real. We brought you in with some Marley. I said, Joseph, let's talk music for a second. You said, well, Keith, oldies, 60s, 70s, and 80s. I've never talked to a sir before. Why are you a sir? In many ways, we're the same story. I came from nothing. You came from nothing. I think the old saying goes that if you want a trophy, you climb Everest. If you want respect, you climb K2. I've built an AI myself, and it's pretty fascinating when you can have a conversation with yourself with your own knowledge. Have you done that before? Why are we rushing to make these tools if all they're going to do is hurt humanity? Does the world need an Oppenheimer moment with AI?
What a fun show.
What's going on, nation? Hey, it's here. We're Thursday. Kieren James Lubin's in the lab. We're talking blockchain, BlockApps, all that stuff. What? Yeah, there's the pause you're waiting for. There, let's slow it down, Mr. Bilous. Oh, slow it down. Let's put some background on for us. Slow down the theme of what's going on. Hey, I'm 3 cups of coffee today. Morning show was going good. My music is low. Where's my music? Let's get some music rolling here, late nation. Oh, I think we lost. I had some tech issues first thing this morning. Like, it just seems like happening these days. Anyways, live in the lab coming up today with Kieren James Lubin. We're talking blockchain, talking BlockApps. And, I know you're all like me wondering, where the hell did that blockchain go? Like, we were all hearing about it years ago. It was like all over the place. And now are we talking about it as much as we used to? I think Kieran is. I think he's probably talking about every single day in his world. But are we all talking about it in our world at all? Is, the metaverse came and left? Or is it? What's the metaverse? So Kieren James and I are going to talk blockchain. It's this idea of taking physical world, digital world, merging it all together, right? It's the concept of taking what y'all might own digitally, y'all might own physically, and merging it all together. So I played in the blockchain a little while ago. You're like, what? Play with the blockchain? Yeah. So admittedly, it seems like it has fallen out of the world's conversation these days. So Kieran's going to come up here in a few moments. We're going to talk about it, how it's weaving its way into the enterprise, how they are making a difference in that world. I'm a little distracted. I'm admittedly a little distracted, and you're probably wondering why. And I'm going to tell you why. I'm a little distracted because I don't have the music in my ears. And you see, we all know how I work. When music's flowing, the words are flowing. When there's no music flowing, I'm having a hard time with the words flowing. So why don't I do this? Why don't I just bring on Mr. Kieren? You got to help me. Oh man, I got no music in my ears, and I'm like, I don't know what to say. Kieren James Lubin, thanks for joining me in the lab today. Where are you joining us from today?
Thanks for having me, Keith. I am in Miami Beach, Florida today, where I spend most of my time.
Most? What's that, like 80%, 90%, 100%? What's the most?
I'd say like 60, 65, something like that. The majority.
Where's the rest of the time spent?
We got main office in New York, so I'm there pretty often on business, and then around, I don't know. Thankfully, business travel is not as crazy as it was prior to the pandemic. It was too much. It was like 2 weeks a month, sometimes more.
Have you noticed a big change in your world with that, Kieren, since pre-pandemic? And I know it's an obvious question, but is it? Like, did people fall back to old habits where it's like, I need to get the hell out of the office. I need to get the hell away from my family, and I got to go on the road. Does that still exist today, do you think, Kieren?
It's coming back, but I think there was a permanent change. A lot of people restructured around at least a half remote kind of life,
Yes.
and some of the people have kind of settled in. And I think sometimes it is better to get people in the office for brainstorming and just a whole lot more cohesions, ideas go back and forth faster. But sometimes you need the remote talent pool too. So we'll see. I think it's just going to be different as we go into the future. Things have just sort of shuffled a little bit, and I don't even know what it'll look like. But we're not going straight back, I guess I'd say.
Are you a remote? Are you distributed workforce, Kieran, or do you guys have? Are you guys centralized or distributed?
Hybrid. Most of the people are in Brooklyn or near enough to Brooklyn. So we do have an office there. A couple people down here in Florida. Some even in Canada.
Yeah.
But we meet up at a minimum quarterly, and then most people meet up more frequently than that for face to face.
Okay, that's awesome. So we were connected in a not normal way for me, frankly. One of your colleagues, I believe, knocked on my door and it's like, "Hey, Keith," I'm like, "Yes." He's like, "I have a perfect guest for you." I'm like, "Oh, do tell." He's like, "Kieren James Lubin would be a perfect guest for you. I think you guys are going to vibe great. I've heard your shows. You're kind of nerdy about a bunch of different topics. You seem to know a little bit of everything, Mr. Bilous. So I think you're going to have a great chat with Kieran." I'm like, "All right." So we got introduced and now we're here in the lab together. And I'm not the biggest fan of doing tons of research with the folks I'm sitting with because it feels like it puts me and it puts our conversation in a box. So I like to walk in, ears wide open, eyes wide open, eager to learn. And coming in here with you today, what I did take some time to read about, Kieran, was where you guys are. I'm not even going to say trying, where you're absolutely making a space in the world of blockchain, BlockApps. And as I teased in my monologue, that world has changed, hasn't it? Especially kind of as we pre-pandemic, pandemic, the Zuckerberg metaverse stuff, internet changing all over the place, and then blockchain just kind of seems to have faded out of public conversation. Am I wrong?
Yeah, so I think it's changed, and it's a cyclical industry. It's kind of like oil and gas, where in the boom times everyone's hiring, profits are great, etc. And when the prices are down, everyone feels bad. That's what people do. They're trimming and all that sort of thing. And it seems to always come back, and it comes back in a different way. So some of your audience probably even lived through the Mt. Gox bust. That was sort of the first iteration of the cycle, and I guess I've lived through maybe 3 or 4 more since then. And so you kind of see this pattern over time where, and this is not financial advice, but I tell people, like, if you're looking for sentiment-driven buy and sell signals,
Yes.
when people are not talking about blockchain or calling for the death of blockchain, it's time to buy Bitcoin, Ether, etc. if you're into that. And when friends of yours that are not in the space start calling you about it, that's the time to get out. That's pretty close to the peak. And it's just been this way for, coming on a decade now. So I think what's maybe different this time, each cycle we get closer to the original envisioned reality, where people really moving internet native assets and currencies.
Yeah.
The use cases have advanced, where you've got better tie-ins to the real world, which is always what we've been about. And each cycle it gets closer. So, and different things emerge too. So it's I think it's ups and downs, a lot of big swings, but it's continually marching forward in progress. And so there has been a lot of price action, and it seems mostly to be caused by the institutions. So I'm still not hearing public paying a lot of attention to blockchain right now as compared with the last cycle. That tends to lag a little bit, but I think it'll come back again. I'll call it 6-12 months. Suddenly there'll be another fever pitch, different but similar to the last time.
Kieran, is it me or is it unfortunate that a number of people had to get really lose a ton of money with the crashing of Binance and the other exchange that crashed, and a lot of people had to lose a lot of them, actually, right? A lot of people had to lose a lot of money before some of the government institutions paid some attention, charged some people, put some people in jail, and then the line just moved further towards legitimacy, right? Is that kind of what you mean, where it's okay, the Wild West moves to legitimacy, we get caught, we got to fall back again, and it's like it's it's like that cycle, right? So now when we move forward again, Kieran, we've probably rid the first batch of bad actors. And now there might be another batch of bad actors, but the loopholes the first batch exploited, those are closed now.
Yeah, it's a good way to look at it. I think, I mean, so we've always been about legitimacy, and
Yes.
there's definitely, there are times when it's faster to make a lot of money the illegitimate way than the legitimate way. And hopefully, some combination of the industry itself, law enforcement, regulatory bodies will make, the the path to success, the good way, right?
Yes.
And in some cases, you could argue that you could make the barriers too high, and that would also, like FTX, not really registered in the U.S. They had a U.S. entity, but if they were more in the system, and we hadn't created some amount of hurdles, and they were working on this quite cynically. To go and do the right thing would be easier. And the flip side is that some people are just will ignore the rules no matter what, and we hope that those projects don't end up with a lot of customer funds, right? So
Yes.
and it's a people are relearning the lessons of all of financial services to date. If you read U.S. history, lots of regional banks each issued their own currency, and it was very unstable. They would all, there'd be bank runs all the time, and the system kind of worked itself out over the years. And so, in many ways, some of those lessons are being relearned as we go here. Like Celsius, they just didn't do a great job as a lender more than anything.
Right.
They did other stuff too. Um, but yeah, so I think the way where we position ourselves is we want to think about transactions and value that would have happened prior to blockchain. So that's why we say real world assets. Just the the activity where we're creating something from nothing, which like a lot of the NFT world is, and the ICOs of old, all the net new cryptocurrency is awesome and exciting. But when it comes to people's long term behavior, will they stay interested in those things? You kind of want to stick to staples and things that blockchain can add value to, but have kind of been around. They're not created just from the blockchain
Yeah.
world, at least in my perspective.
Kieran, did we as marketers and humans overcomplicate a simple technology by
That's
calling
a
it
good
all these
question.
calling it all these convoluted words and names and bringing technology to the front when all we needed to say was that it's a public ledger, a digital
Yeah,
public ledger? Like, Apple has done a wonderful job saying it is retina display. All right, what does that mean? It means it's clearer than your eyes. Okay, great. That's all I needed to know. I don't care about the pixel density, but I don't care about blockchains and BlockApps and crypto and Ethereum. Like, so I'm speaking for the naysayer who's like, just Kieran, tell me what the hell it is.
yeah. So I agree. For the mainstream market, I think the technology is just way too jargony. So
Yes.
there are big technical advances happening in cryptography, in putting together distributed systems, et cetera. But to the outside observer, it's like an in group that kind of knows what it's talking about and hyping up tokens and all that sort of thing. And you can lose the forest for the trees, right?
Yes.
And
Yes.
it's sort of it's almost like this group of people is asserting something that people kind of can't really understand, and then people become enamored with it. Whereas most innovations are reasonably simple, right? To your point,
Mhm.
it's a ledger that you can't go in and modify, which what can happen at a bank ledger. Every once in a while you'll see um, you know big banks, they've got a big database of all the accounts, and so some employee, they're very good controls on this, could just go in there and start editing stuff and move funds from place to place, and there's no real recourse, and there's no real other check. There are some regulators and such on that, and that's at the core what the blockchain does. It creates a system that's an open ledger that lets you have a lot of confidence in the state of all the accounts, and it settles instantly as opposed to the possibility of things being clawed back, and this and that. And this has been a challenge for people to adapt to. The fact that transactions are more or less instant and irreversible means you can't call the credit card company and say, hey, I paid for this, but put a stop pay on because I didn't get the thing, or it wasn't what
Mhm.
I expected. And so you've got to reinvent all of those kind of consumer protection and other mechanisms in a fundamentally better and more open technological paradigm. But that just hasn't had the time to mature, like everything else. So I think, and the philosophy is part of it. I mean, the people who we believe are behind the creation of the technology and similar technologies, we're very philosophical. Crypto anarchists, cypherpunks, they
Yes.
called them.
Yes.
But it doesn't need to just be about that. It needs to be about what's useful for consumers and what's fun and what's a good way to move value around. And so I agree with you. That there's too much jargon, and the problem is that people respond enough to the jargon,
Mhm.
and people part with their money, and so it'll probably continue until um, that stops happening, I
It
guess.
must have been so BlockApps. How long has BlockApps been around, Kieran?
We really got so we started work, and I worked on the Ethereum project back in 2014. We really got going and like formally incorporating kind of end of 2015 into
Okay.
2016. So forever in blockchain terms.
So you've worked with Vitalik?
I did. I did.
Yeah. So
Yeah.
for those that don't know, Vitalik is the Buterin, right? Vitalik Buterin is the founder
Yes.
of Ethereum. Uh, it must have driven you absolutely mad, Kieran, as a human being, when you were watching Binance and FTX and all these companies. I'm just going to use the language, just fuck human beings around the planet. Because you're out there getting up every single day trying to legitimately build a business, talk to legitimate customers, sit down and work with customers like Microsoft and massive corporations. And then you have your morning coffee and you turn on Mornings with the Live with Keith and Nicole, nudge, nudge, wink, wink, and you're like, oh man, there's Binance screwing somebody over there, or there's an exchange over there screwing somebody there, or there's a brand new ICO screwing somebody over there. Like it must have just been driving you nuts. And I'm also going to imagine, Kieran, that as all that's died down, you probably sleep much better now too, right? Because like, okay, we can go to work. We can just do our thing. We know it's legitimate. We know it's good. And we're solving a problem.
Yeah, okay, so I definitely hope the hype cycle goes a little slower this time. So I think it's in the exuberance that they also say, right, like you can't cheat an honest man. Like, the people that they screwed are definitely looking to get rich quick and power to them.
Right.
You know,
Yes. Yes.
but it's the combination of the exuberance, the fast price run ups that get the kind of more cynical actors in, and
Mm,
to scale also they're using the price motion to finance the either
yes.
bigger, sometimes they're just a degree of honest mistake, sometimes they're full on fraud as we've seen, um, or and it's but what I would say is actually mostly we've kind of tried to ignore it. Like
Ha-
the so I'm not like waking up upset about it necessarily. Oh, okay. In the XDX times, we have traditional venture capital investors. They all became a little bit jumpy. They're like, especially the crypto ones. They're out there trying to raise their next fund. They're getting harder questions. They're all saying, "Hey, do you have?" And what was interesting is like you could argue that some of the contagion in the blockchain crypto world spread pretty well to the traditional banking system. The
Absolutely did.
three tech banks closing, or four, I can't remember,
Yes,
in that
yes.
pretty short
Off
period
Bank
of
of
time.
California. Yep, yep.
Yeah. And so then we're getting, same call. Like, well, did you have anything at FTX? Did you have anything at Silicon Valley Bank? No, no,
Mm,
thankfully.
yes.
Silicon Valley Bank we talked to, they seemed, perfectly good and startup friendly. We didn't, end up moving over there. But so in that sense, we're lucky. But yeah, I guess it's frustrating that the space has, you know, chosen the maybe easy way so frequently.
Mhm,
I think both, the consumers are getting savvier. Uh,
mhm,
Regulatory bodies are engaged. I feel like the law enforcement apparatus has been pretty good, and I think the regulators have been mixed. Um, and so, yeah, it's just like you need a mix of a perfect system where all of the rules are within the system, and just sometimes things still happen that are allowed within the system but against the law, and so law enforcement has to kind of step in there too. So we got to be practical, I guess. Sorry, good.
you talk about regulators and crypto and the technology is so forth has been built to essentially exclude regulation and be self-contained, but yet as legitimate operator you recognize and you probably welcome regulation and rules and legitimacy to the industry. Would I be correct to say that?
I do, although there's still like a little bit of like a outlook incompatibility. Like
Yes.
if you and like all the rules were written prior to this new technology existing, and the technology, it's a tool, right? It's it itself is neither good nor bad, and it presents great opportunity. But it is definitely difficult to sort of shoehorn, like for and again, I'm not a lawyer and no regulation expert, but everything that's kind of securities focused is focused on an issuer, and you can issue certain places, and you have your registration requirements. It's very kind of like choke point oriented,
Mhm,
like
mhm.
do it here so we can see it, register it first, then do these things, then follow this process, etc. And blockchains are open and compositional, so you might have some asset that then very quickly gets included in some other asset, and the amount of kind of paperwork you would need to do to facilitate what's currently happening on blockchains, and go register all of it. And that is, if you believe that if you and what you're doing fits into the regulatory regime,
Yes.
it's hard to do. It kind of can be done, but it's not always clear that it's definitely not the easiest path. And it's sort of the right way in many cases, but sometimes it's just incompatible with the attitudes. Like
It
again,
it
you
is
know,
because you're dealing as much generational. Like
exactly.
you look at Congress, the United States, like those gentlemen, those ladies that are sitting there aren't making decisions for your
Yeah,
technology for the next 100 years. You almost need a couple of generations to go to sit in those chairs to give you the support you need, probably as a future tech business operator. You know what I mean?
yeah. I think like the internet benefited from what was in effect a safe harbor early
Yes.
on, where people kind of just did stuff, and if no one was really hurt on the other side, there weren't really any consequences. Like there were still things to work out, but in contrast today, and I also take it to AI, it feels like we're hasty to make rules on things we don't yet fully
Mhm,
understand.
mhm.
And I don't know what the solution to that problem is. Like, you need rules, but when the old rules just like it's like square pegs and round
Yes.
holes.
Yes.
It's not that like people don't necessarily want to comply with the rules. It's just they're sort of different,
Well,
and we're coming from a different outlook. Um, so somehow we need to like make it easy for people who are doing legit stuff to fit into either the current framework, or amended perhaps, or a new framework, and at the same time, it's that maybe a little more dialogue. It doesn't feel in the
yeah.
U.S. right now like a dialogue, I would say, um, but still, it's like kind of the best country, and the law
Yes.
enforcement's doing the right thing and making people whole to the extent that they can on their crypto assets when bad things happen. So I gotta commend the system as it goes. But yeah, it's still something we need to figure out.
I would also imagine, Kieran, from a pure practical. So I'm going to put my practical hat on for a second. All right, team, let's go sell some product. Like it's like who you're speaking to probably is of a certain age and demographic, who is opening the wallet. And I know that's obvious with every product market fit, like service or product you're selling, but even more so with you because it's generational. It's you gotta bridge the gap. You gotta understand first of all what blockchain is. They gotta understand the benefits of it, and then you, it's just there seems to be a lot of hurdles that would come to closing a deal in your business. Am I right?
So yes, although again, we've always courted, say, I'd say a blockchain friendly, but a little more traditional outlook
Okay. Okay.
audience.
Okay.
So I think um, to your point earlier, don't lead with the jargon, don't lead with the features,
Hmm.
don't lead with the like, some audience wants that super techie people who are like hanging
Yes.
out on Discord doing blockchain stuff all the time,
Yes.
and we serve that audience too. Um, but we want to be a bridge where regular people don't need to understand all those details. It's really about let's say on the corporate side, what does my supply chain look like? How can I make it function better? On the kind of individual side, what things do I own? What can I buy? How do I transfer them? Et cetera. And so some people call this like Web 2.5. So we've got,
Yeah.
an interface where it's like very easily, you don't have to think about the blockchain part, like log in, username, password, buy, sell things, right? Um, and for the blockchain audience, you can actually, so all this activity occurs on our blockchain. You can get in there, you can run a validator, you can build new applications on it. And so we're trying to preserve that choice. And you see, a couple of the popular companies out there now kind of making this Web 2.5 choice, like folks like Farcaster, mostly, using it from a mobile app. It's a cool social experience. They got a blockchain. There's, this payment for the usage of it, et cetera. But it's really about making the benefits shine in the eyes of the consumer and hiding the sort of, sharp elbows, rough edges of the tech. And so that lets us kind of live in both worlds, basically. So more or less normal people, probably still forward thinking, but not deep in the weeds blockchain experts and the real blockchain natives. Both are kind of constituents, customer bases that we have.
We are really on the precipice of the internet. Well, it's been changing, but it's rapidly changing right now in terms of the monetization of digital assets, right? Not just through blockchain technology, but subscriptions here, subscriptions there, micro subscriptions on newsletters. And like we are really rapidly seeing it in front of us, aren't we? Where platforms like OnlyFans and Patreon and Substack, and it's this rush to monetize everything digitally. And I have to think that conversation only helps the technology underlying it all, which not all of it, but some of it, which is stuff you're selling, but just that overall conversation about putting value on digital assets. That's music to your ears, isn't it? Because for the last 20 years of the internet, as you and I have grown up on it, it's been free, it's been advertising supported, and there's been no value placed on it. We're now finally seeing that shift, aren't we, Kieran?
I think it's a great observation. Yeah, and there's some companies out there that are doing, let's say, Web3 inspired models, but maybe
Okay.
in a way
Okay.
like a Rally Road, so Rally Road. Basically, they acquire collectibles. I'm just a fan of what they do, and almost a Web3 company. Some of the collectibles are like big NFT collections, but
Okay.
then they basically acquire them, make sure they're in good shape, and they kind of IPO them and they sell them to the public. And so you're seeing that idea of ownership of this physical thing, which you could fractionalize before, prior to but you'd be setting up a company, calling people, and this and that. It's getting really internet native. It's all just through a portal, and so it's not just like an Amazon. You're buying something, it's shipped to you. That ownership can be purely intangible, but still linked to a cool physical thing. Um, and to your point, you see it. Um, people are, I think, a lot of the drivers, people want to be involved in a community. And especially, maybe it's pandemic caused some of this. You're kind
Mhm.
of, lots of us locked in our homes, right?
Mhm.
And
Mhm.
staring at Twitter or
Mhm.
Instagram or something all day. People want a sense of belonging.
Mhm.
And I think both for subscriber communities, but also like good NFT communities, there's a big overlap in that sense of like, you want to have some piece of this thing, whatever the thing is. And maybe it's a thing you own and can transfer. Maybe it's just, being allowed in. You want access and to be there with your friends who are like-minded. And, I think it harkens back a little bit to the forum culture of the internet, which
Yes.
people spend a lot of time on forums talking to strangers,
How I grew up.
typically pseudonymous. And it's kind of gone, right? Like
Yes.
people don't really do it anymore, but it's been replaced with pretty specific communities around, again, Substacks, Patreons. It's sort of it's kind of celebrity centric. Everyone's a small celebrity now,
Yes.
but I
Yes.
think it rhymes with the old. And it's, to your point, all that stuff was really pretty free. Like it's way better at monetization now, um, than it was before, and it can be really fast. So it's been just interesting to observe. And
Well,
again, people are changing you know their outlook, as to your point.
you have to look no further, Kieran, than Stripe. Like it is everywhere on the internet now, isn't it? Like you can buy anything with Stripe. And I use that as an example where probably as little as 3 years ago or 4 years ago, it was still difficult. for a lot of small retailers, small merchants to add commerce. Well, Stripe is everywhere. So it's conditioning all of us as human beings to, oh, it's $2 here, $4 there, $6 here, which for me, projecting to you means that you're conditioning an audience to continue understanding this idea of digital ownership, because that's ultimately what you're selling is digital ownership of physical assets. And maybe I'm oversimplifying it, but that is it's getting people conditioned to buying that, right, Kieran?
It absolutely is. We do use Stripe. We've got other payment methods as
Yes.
well.
Who
Something
doesn't?
like a trillion of volume like last year. I can't remember, but that's an astronomical number.
Yeah.
It's like I think they say their mission is to like increase the GDP of the internet, and it seems like it's working quite well. And it's interesting. It's they part of the lesson is just they took a thing that existed. Everybody has a credit card,
Yeah.
or an ACH, etc., and just made it like so smooth that the headache is gone. And that was really just a little bit of headache will deter activity. It's surprising that way. Just how many more people will do a thing if it takes less than 5 seconds versus maybe 25 seconds.
It's
It's
friction the killer. Friction it's
it
incredible.
really is.
Isn't it though how much friction's a killer? And it started out, Kieran, when we all had our 56K baud modems. I know you had one like I did, right? And then we all
Yeah.
jumped up to our Ethernet modems, and you and I are just celebrating in our houses. And now we get frustrated if the internet page doesn't open up like within half of a thousandth of a second. We're like, what the hell's going on?
Yeah, I think it's probably on balance a good thing that people are so impatient now. It does mean that things happen faster. Although I think something's lost with like the deep work. We got to figure out how to block off a couple hours of silence with our thoughts or in a notebook or something. It's gone really crazy.
Speaking of friction, while I understand the reason why they did it, and I'm going to call it out here in a second, but back as maybe pre or during pandemic when crypto and NFTs were just big run, Dapper Labs makes an appearance. Dapper's great product, collectible, et cetera, et cetera. But when they gave me the ability to use my credit card to buy collectibles, to me, that was almost like a jump the shark moment. I understood why, because it was about eliminating friction, but it also took the fun out of, for me, the idea of, well, yeah, I'm using crypto to buy this, and that's kind of cool to me. And I'm like a nerd that I can do this and nobody else can do this. Oh, can you use my credit card? Oh, okay. Well, it's just like, in some ways for me, Kieran, it decreased the value for me. Does that make sense?
Yeah, I think, and I'll tell you the way we've been. So we support the credit card, and it's you know um,
We
10,
support the
20 to
credit.
1,
We support
50
the
to 1.
card.
We support the credit card. We're practical people, right? I'll tell you. So when we make stuff available for sale with Ether or something,
Yeah.
people are like, sometimes they don't have it, or sometimes they don't have it right in the wallet. Where like we
Right.
did a MetaMask integration, so
Yes.
you want to see the token show up in the wallet, so you're like, oh, I got to get it from here into the MetaMask, and then they're like, wait, what's Ether going to do price wise? Should I hold it? Should I keep it?
Yes.
Maybe they're like waiting for like market timing before they
Yes.
buy the thing, and so I think um, crypto native is better for
No.
sure. But I think like people don't see the currencies as like necessarily always mediums of exchange. They think store of value most of the time, and
Mm.
so it's like hodl. Like people are holding them, they're not buying stuff. So I think that's why I like stable coins. We've
Mm.
got sort of a form of stable coin out there, and just all the other ones. People don't feel bad about spending their stable coins, right? So I think I hear what you're saying. It is less cool. Also, the credit card, the interchange fees are really high and
Yes.
all that.
But it was just
But everybody's got them.
yeah, and listen, I understand why. I'm not dismissing why Dapper added credit cards, why using credit cards. It was just this uh you know what the same way is? So when Canada legalized cannabis in 2017, the whole idea of standing behind the corner and smoking a joint, it lost all its luster because it was like, oh, now everybody's just doing it. It's like it's
Now
legal.
everybody's doing it.
And it's like, oh, it's like not really kind of like it's like, oh, I'm not kind of hiding behind the corner anymore. And I found it was the same way, which is like, oh, I can use my credit card. Oh, well, the luster off of the But listen, as a business operator, you're like, yes, Keith, but I can get
Yes.
7 people out of 10 using their credit card to buy my product, and which makes it easier. I get all that. I completely get all that. I'm the 1% that's like, well, no, but I want to use my crypto because I want to be all nerdy and cool. Right. So
Back in the day, there was, I think they shut down eventually a couple of years ago. Local Bitcoins was a service where basically people would go on and meet up with people face to face to do Bitcoin buy and sells.
yeah,
I never actually, I was sitting next to people in some of them. I never actually did it myself.
yeah.
Folks I could trade with, but if they needed to, but it felt extremely sketchy. That's how, like, meet me this place at this time. Then you send it, and then like you could like escrow the money, like cash is sitting there
Yeah.
between you, and you're waiting for the confirmations to go through. That's fun,
That
but yeah, but also it's quite inefficient and
I had a
a little
guy.
scary.
I had a guy on my show. You talk about hodling. I had a guy on my show, Kieran, couple months back. Oh man, his name is. I got to get his name. But he got into Bitcoin when it was little on the ledger, and he's now building with his big. He's now retired in Mexico. He's building Latin America's biggest music recording studio, based off of the recording studio in London that the Beatles recorded out of. He took the plans. He's building the same thing in Latin America using all of his Bitcoin proceeds from years ago. He's like, oh yeah, I did okay. I'm like, oh, how good
Yeah.
did you do? You must have known. You must, because you've been around the industry for a long time. You must have, maybe yourself, but you must know people that have done exceptionally well with buying Bitcoin when it was $1 or $5 or whatever it was that you now sit back was it 20 or 40 grand. You must know a few people that have done pretty well
I know a few that really did well on Bitcoin, and more that really did well on Ethereum.
on
So
Ethereum.
because we're like very much in the Ethereum ecosystem, built our own version of it,
Yeah.
and just so worked pretty heavily on the project in the early days. And yeah, I guess like plenty of people have gone and moved to Puerto Rico for
Yes.
tax
Yes.
purposes or
Yes.
this or that. So and yeah, I guess the funny thing is like looking back on it, they say this about investing in general. You're not bothered really when you make an investment, it doesn't work out. But what bothers you is like when you
Yes.
make an investment, either time, money, or etc., and you don't go in enough. Like if you make the right
Yeah.
play, but you don't go big enough, So it's been good, but it could have been better.
Yeah.
I was right there.
Kieran, you opened it up and I want to go there with you. Ethereum, you were on that project. Can we nerd out for a little bit on this one?
Sure, absolutely.
So that's fascinating to me. So, what did it feel like waking up every single day, working on a project with a pretty smart fellow? I'm not trying to demean yourself, but the whole team
Of
of you
course.
working on this project, knowing that you're inevitably changing the world. And I'm going to make that statement, knowing that you're inevitably changing the world with this project. What was that like?
So it felt maybe inevitable, but it wasn't clear at the time. It
Mm,
went way bigger than anyone expected. It seems like
really?
so. I did, Keith. I'm sure you don't have the time. We did a couple long YouTube interviews, myself and my co-founders of BlockApps,
Yeah.
and we had some guests also about
Yeah.
like the early days of Ethereum. So, if we want to link them, there's a really long form discussion of all of that where we kind of go through it as
I'm
one
going
would
to.
remember. Yeah.
Yes.
I'll shoot them to you over email then.
That'd be
But
awesome.
it felt like the beginning of the internet. Wasn't in the room for that.
Mm-hmm.
Uh,
Mm-hmm.
but and Bitcoin had been out there. There'd been various color coin
Yes.
projects like Mastercoin, and whatnot. But something in the white paper, which I think Vitalik circulated at the end of 2013, or early 2014 when the drafts really got around. It just ignited this excitement, and a bunch of people who were really capable and a little weird, or off the beaten path or whatever, just like stopped what they were doing and worked on Ethereum. Some of them for the foundation, some not. Like I was never employed by the foundation, for
Okay.
instance.
Okay.
And there were a couple other groups so we built the Haskell version with Ethereum. There was a Java version, and there've been many more. And some of these folks were just working kind of independently, right?
Mm-hmm. Mm-hmm.
And because there's this idea that Bitcoin itself was too centralized in the client, the C++
Mm-hmm.
implementation of Bitcoin. They wanted many different compatible versions of it, and that's a way for the project to be more kind of participatory and open. It did sort of work that in that sense. A lot of it was more of a big tent attitude. The Bitcoin people were sort of like cryptographers, and the Ethereum people, while they had the chops, were more like engineer mindset.
Mhm.
So, but also it was chaotic, right? Like the project was not like run. It was run pretty decentralized, with variations on that. So there were still some decisions made by a core group, um, but people jumped in, people jumped out. Vitalik was pretty generous with rewarding early
Mhm.
contributors
Mhm.
in different ways, and it was just like it was almost anti-professionalism. It wasn't like, hey, we got
Mhm.
these dates and this timeline and this and that. They had a roadmap, but it was like they were building a lot of stuff. They're building in addition to the core blockchain, like peer-to-peer, file sharing systems, messaging systems, a browser, a this, a that. And then eventually they kind of like chopped all of that down and got practical. It was as if we had no product managers, no CEOs, like driving for timelines. Like if the nerds took over and just like did what they wanted, that's how it felt. It was
Well,
like
because
a
in theory, they're
creative, kind of hippie agora sort of feel, you know. But it worked, and it would probably be harder to run a project like that today, just because there was not nearly as much competition at that time. Today, you got a lot of like, you know, execution oriented, marketing oriented teams out there. Like I think that the folks at Solana, I've not gotten too deep into the community, but they're very good at marketing and they've delivered technically, right? So there's more of those. But
Mhm.
at that time, it just kind of it worked, and I
Mhm.
think some of it um, got people really excited that it was so fun and open and,
Yes,
like it's
yes.
like a big festival.
But like you said, though, projects have to be organized and mainstreamed and for wider acceptance, right? So while we all love the idea of decentralization, the reality is somebody still needs to be the boss. Am I right? Like that's really it.
Well,
And
it's an interesting. I mean,
because
it
I look at your
it
business,
had a boss. Yeah, we definitely have a boss for sure.
yeah, like you're the
Um,
boss. So but I guess what makes me curious is that there's these principles and philosophies that are intertwined with your industry, which is about, you know, publicity, public ledger, decentralization. But we're the company and I'm the boss. And then that's okay. But in some ways, it conflicts with the roots of your industry.
I would say, I'm more the boss than Vitalik was ever the boss. Let's say,
Okay.
like,
Okay.
it was one. It was a weird project that had like 8 co-founders. If you like go to a group of VCs with the
Oh,
slides, it's
yeah.
like I
Yeah.
got 8 co-founders. They're just
Yeah.
like,
What?
ah, but it works, right?
Yes.
Um, and so it was always. I mean, there was a split of responsibilities and this and that, but it was even then pretty consensus driven early on, and um, at the current state of the project, so you definitely need leadership to drive things forward. If you're going to change anything or make major
Yes.
decisions, so you got to
Yes.
have people to push that. I sort of think of it like democracy. Like we sort of see this weird, and maybe it's a good thing, but stasis in, where you could like, and this is a very explicit choice, but like the government cannot move too fast on anything because like
Mhm.
voters sort of need the time to like weigh in, see if they like what their representative is doing, and where the funds are coming from, and so it goes on a slow cycle, right? This budgeting allocations. It's like time scale of years. So if you're trying to work at time scale of days, weeks, months, you got to be a little bit command and control, or just let people do whatever they want. But then you got to figure out what you bring in
Mhm.
from all that activity. Um, a popular blockchain like Ethereum, like Bitcoin, now sort of acts like a government with elected representatives. Like there's lots of stakeholders, voters, what have you, quite literally in the form of validators, millions of them on the network, but also just this deliberation processes about any change, because it's custodying so much financial value. You got to be really specific. If you're going to change anything, it's going to be tested, and this or that. So it's in this mode where it doesn't feel like, you know, like I think Ethereum today would be really it would be hurt if Vitalik kind of washed his hands of it. If he was like, all right, I'm done, but it would survive. And it might like, so I sort of think maybe he's like the president or the prime minister, and there's a bureaucracy, and there's military and all of that. It's more like that than like being the
Interesting.
CEO of a company at a certain stage. So when blockchains get big enough, they have this. They're like cockroaches. Like they just survive. Sometimes tokens are put on the shelf that get reanimated due to interest, where it's like companies shut down. Blockchains can be pretty permanent. So long as anyone is interested in it, it can just kind of keep going. It's the point of uh,
Mhm,
decentralization. And so, yeah, so that makes it definitely hard to move it forward. Because if you're going to, say, okay, it would be better for the users if X, we can make it faster this way. Well, then people have to all agree to do that. And so you get this gridlock like you see sometimes in democracies. But the trade-off is the secure interest in the things you own on there. You're going to keep owning them, you know, and the survivability, the permanence is a attractive feature for a lot of people.
mhm, mhm. So when I look at BlockApps, Kieran, I see you guys focus on very much looks like three pillars, right? Carbon, metals, and collectibles. Would that be fair for me to kind of set up our conversation? That's where you guys
Yeah, I
stand
would
in.
say
Yeah,
we're open to most all real world assets.
yeah,
So those have been great sellers for us. The carbon side, the metal side, collectibles. But really, we're trying to get real world value to change hands like stocks do, like magic internet money does.
yes, yeah.
And these are good ones because the pricing is kind of agreed. Like people sort of know what metals have a global spot price,
Wow,
right?
right.
And
Yes.
um, so whereas like NFTs, the valuation mechanics are less clear. Some people
Mhm.
have made companies just on figuring out what these things should be worth, and so we're kind of starting with the cases where it's a little, where people want them. Like people shoes are really easy. Like people collect them and um, they can use them, and so that sort of puts a floor on the value um, for what they be, and so it's like a relatively easy market to enter. Still not perfect, um, but it's something that people just definitely want. So as we go, we'll get into the more esoteric assets as well. So like land, we'll try to get some land going this quarter, for
I-
instance. And it, sorry, good.
That's what I was curious about: land, real estate, and so forth. Like I'm wondering, and I'll ask the guy who would know the answer.
Mhm.
Why has the real estate industry not been disrupted by this technology? There's so much friction to buy a house,
How
or
much? Yeah.
why is it? Is it because is it really been a the industry is like, no, no, no. Is it like the lawyers and that whole industry saying we don't want it because it's self-serving to keep out of the industry?
So I think it's a mix of things.
Okay.
I think it's definitely archaic mindset.
Yeah.
Group of brokers, agents, real estate agents, title agents, lawyers, etc. Taxes take about 10% out of a sale. If you add it all up,
Yeah.
which is
Yeah.
a
Yeah.
lot, right?
Yes.
Um, and so they kind of want it to stay this way, but it's also property owners are. It's tough to get them to take a chance on something new. You can do it if you just bring them an offer, right?
Mm-hmm, mm-hmm.
Though they might have signed an exclusive with a seller rep. So that's part of it. But I think the big problem really is just that the ticket sizes are really large, right? So when we've done various forays into real estate, at first we were just thinking, kind of like what you said, this is such a painful process. It is pretty formulaic. It's not perfect. So you could just step by step think about how does the asset
Yeah.
itself settle? How does the title transfer? And
Yes.
it digitize most of that. And what we found is that was part of it, and that is a big blocker to it being like a liquid functioning market. But I think what's more of a blocker is just um, that the prices are so big means there are few transactions, which means people kind of disagree on price, right? You see stuff that someone prices really optimistically, sits. They lower a little bit, sits. They lower a little bit more, up, sells quickly. And so that there wasn't a price discovery mechanism that, sometimes these moves are hundreds of thousands of dollars at a time.
Mm-hmm.
Whereas like on a stock market, it's like, okay, the shares are worth 37 bucks, and you might not have interest at 38, but you're down to 37. It's not that big a difference. Like the spread between buyers and sellers is smaller because there's just more market, more people are able to get in and out. So I think the thing that real estate needs is um, fractionalization or sometimes securitization to bring those minimums down to make them more liquid trading assets, basically. And that would tell you what the price for an overall buyout should be. Like, you certainly. So I think basically, and a couple of firms have done this, some Web 2, some Web 3. But in effect, what they do is they acquire a property, IPO it. They probably do some improvements and cover the cost of those improvements with an IPO, and they sell the ownership in that property out to the public. Um, and from there, hopefully, there's enough of a trading market for interests in that property that it could be accurately valued.
Mm-hmm, mm-hmm.
And um, if that were the case, if you had substantially a large number of properties or most that people could enter in and out from an investment perspective, I think you would just see much shorter lead times. So a lot of the stuff you're talking about, the pain and the close, you just do that like once, and
Yes.
then you would be able to buy and sell the property. It's still, if someone wanted to make an overall buyout, it still might be a little bit painful, but we would know the price. You probably get bids all the time. And you could also do it in part, like issue equity for 20%, 30%, 40%, so that someone gets a share of the proceeds. You as the owner still operate the property. And maybe you can buy the financing out. As interest rates have been high, maybe you want some equity financing instead of debt. So I think that's what's needed, basically, just to lower the entry barrier um, into the ownership of a property as some sort of financial asset, and that will help make the whole market work. Basically, as more dollars are flowing back and forth, you can get groups very easily together to buy outright ownership and things,
Right.
where it's yeah. So the culture is different too. It's like if you build a skyscraper that's a rental building, there's only like to sell it outright, there's like a couple private equity firms you can sell it to, right? You don't have that many exit options. You're just going to hold these things forever, which is fine. But you can imagine if instead you had access to a stock market and all the capital there, it would be easier to move at an asset by asset level, and then the pricing would be more sensible. The market work good. So that's what I think you need to fix those other problems too. Like, to make this all happen, you can't have like 10% broker fees on the shares and the properties.
Right. Well,
But
and changing consumer habits too, right? And getting them
exactly.
used to certain things, getting them used to dropping millions of dollars or hundreds of thousands of dollars, and changing an entire process that they have been conditioned to doing one way for so many years. Now it's a whole different way, which I think is one of the reasons why luxury goods are a no-brainer for your industry, right? Like if you're buying a Birkin bag or something that is physical, you get that digital authentication and Bob's your uncle. Like that's low-hanging fruit for your business. No?
Definitely, yes. So I mean, what I would say is it's a different sale than some of the things we've done today,
Okay.
because the pricing is a little bit subjective.
Yes.
We've got a lot of interest from folks in luxury goods coming in, but things like maybe watches are a good thing in that they tend to hold value, and the pricing is not all over the place, if that makes sense.
Yes, it
So,
does. Yes.
uh, and the handbags do tend to um, hold their value or even appreciate, and for certain brands, and as long as you take care of them. And you also find that people sometimes warehouse these things. So I've got a friend who's got, I think he said he's acquired thousands of watches over the years. It's not wearing thousands of watches, right? You need to store that somewhere. And really, you could start to think of them as, what's on the blockchain is sort of like the title,
Yeah.
of the
Yeah.
watch. And it's lower ticket than real estate, right? So you can find a lot more buyers for something that's $10,000 than something that's $1 million, if as an outright purchase. So luxury goods could be done even without the fractionalization aspect that we're talking about, up to a certain point. Above a certain point, fractionalization makes a huge difference in making the market function. But yeah, I think the authenticity is really important. Blockchain helps prove, like, okay, where's that original receipt? Whereas aggregate all the data. If someone assessed the value, if someone assessed the authenticity, put that all there with it. It tends to be pretty opaque otherwise. These sort of industries, and yeah, it's sort of a good next step up in complexity. So it is something we have in mind as well.
Kieran, am I nerding out when I look at the the world this way? let me paint it for you. So we know that Apple released AVP, the Apple Vision Pro, this year. Meta's on their journey to be the Android of headsets. We know that spatial and facial computing is the future. It's not even debatable, frankly. So let's not even have that debate. But look, he's like, really, Billis? I'm like,
That's
no,
funny.
it's not a
Yes.
debate. It's not a debate. But it's
I agree with you.
yeah, but it's this idea of looking into, so I guess what I'm getting at is that technology is starting to bring forward what you're doing, because when I look through a lens into a room that has no physical objects in it, but has digital objects in it that I own, that's where you really come into it, right? And so those nerds like myself, yourself, that are putting headsets on and playing with virtual worlds, we're like, oh yeah, I get it, because I got that picture on my wall that only, so when Kieran's at my house, he's saying, oh yeah, Keith, you got a great room, man. Because I can see a future, I'm sure you can too, where my kids have houses that probably don't have a lot of physical goods in them, have a lot of digital goods in them, and somebody has to own them. Like, I'm oversimplifying it, but that's really it, isn't it, Kieran?
No, I think you're right. I think you're right. Samsung has done really well on its like specialty NFT viewer screens. It's actually like a meaningful P&L for them. And you find
I have one right over, actually, over here. I have a Cero right over here with my NFTs on it.
Yeah. So yeah, it's ownership is a societally conferred fiction, right?
Oh.
Most of the time. Now, Bitcoins, Ether, et cetera, they really are a bearer asset. If you get the key, you can move the thing. But most everything else, if you're enforcing a copyright, if you're enforcing a title, if you want like people to not enter your home,
Yes.
You gotta have someone
Yes.
who agrees that it's your home, right?
Yes.
And so to your point on the NFTs, we spoke, to some collectors. There's a great phrase like, yeah, NFT is great, and in some ways it's better than a painting. Like, I can trade it, I can flex it.
Yeah.
They use that term. And so I imagine like you could be living in a house that's like a little gallery, and like have a bunch of furniture that has a bunch of Samsung screens on it, and you can see like the owner of the thing changing, so the name could change, or something like that, or perhaps you acquire different NFT art, and that keep switching up. So it's going that way. You still need physical stuff. I'm surprisingly into like vintage furniture more than I expected I would ever be. Like, it's better, but you can imagine like people also like the idea of things lasting a long time. So like furniture that you buy today is crappy, and like, well, you get 10 years out of it, where something you get in a Fort Lauderdale vintage shop might have been there, around for 50 years, and it's still pretty good. So I think it would be cool to kind of combine the two. Like, so you want the physical still, you need it, but you could keep updating it with new, interesting digital, to your point.
I think you're onto something there. And I know our time is coming up here very short, my friend, but this has been awesome. Thank you so much.
Yeah, absolutely.
I think you're onto something there, because, analog culture, nostalgia has never been more popular. And we both know, history is not linear. We go through cycles with technology and everything else. And just like my show is a throwback to some of the old shows in the past, of late night TV or whatever it is. But it's, you're buying your vintage furniture, but yet you're a digital dude. There's absolutely a place for both, because I can see your room. It's bare. You got a real vintage, cool couch in it. But then in your room, you got these digital display mechanisms that display your digital artifacts and your digital ownership. That, to me, in many ways, is what probably my kid's place looks like. I don't know how it doesn't, frankly. That's how I think the future looks.
Yeah, I think that's right. And it'll blur together. So your point on the metaverse, it's it'll all be combined. Maybe we'll have. I think they need to get the glasses a little smaller. Right?
Well, hey, man, we know they're going to be, Kieran. We're both kind of tech nerds. We know that when the TRS, the Radio Shack Trash 386, wasn't this size, right? It was a big ass machine. The first computer I went and played with was the size of my house. So we know, Kieran, that the glasses are coming down, my friend. We know that.
But we're already cybernetic. We've merged with the phones already in the computer. So the next step is just going to happen.
That's right. Yeah. Well, and you're merged with your AirPods in your ears, right? So that's exactly it. Kieren James Lubin, I have had an exceptional conversation with you. I'm very grateful for your time today. I want to be a good host and make sure you get to your next appointment on time. So while we're wrapping up, what have I not asked you about? What does the audience need to know? Where can they find you? Here's your chance to make sure that the world knows about Kieran and BlockApps that I didn't talk about here today.
Yeah, certainly. So we're at blockapps.net. We help people buy and sell real world assets on blockchain. And you can forget about the on blockchain part if you don't want to know about it. But check us out at blockapps.net. It's going to be exciting. A couple years ahead here. I think this cycle is, as we were talking about before, is the one where the rubber meets the road for more or less regular people to benefit from blockchain technology and not to need to know that they're benefiting.
Interesting. Yes, what you're saying, Kieran, is that as somebody who's in the industry, who might be speaking to my aunts, my uncles, or people at a different demographic, you are saying that you are seeing as an expert that things are becoming more comfortable for all of us.
Definitely.
And more accessible, right?
More accessible, more exciting, new things you couldn't do without it, things you wanted to do before that you can do with it.
Yeah, that's awesome. Kieran, thanks for joining me in the lab. I'm going to say goodbye to you. You say goodbye to the audience, and then I'm going to put you back in the green room. I'll go say goodbye to the audience. I'll come walk you back out, okay?
Appreciate it. Thank you, Keith. Great
Awesome.
to be here.
Hang tight, my friend. There we go. Hey, great chat. You know, listen, yesterday, I think I got the music working here. Let's see here. Oh, there we go. Woo-hoo. All right. So, wrap it up with Kieren James Lubin. Great chat. I was reflecting on this when I came into the lab today. We bring guests of all kinds. We absolutely do. You know, I had a guy in the lab yesterday who hunted bad guys. You know, he's not only a lawyer, but he's a counterterrorism expert. So we go from counterterrorism expert to he was a soldier, counterterrorism expert, lawyer. Now I have Kieren James Lubin, conversation on the blockchain, technologies changing the future. We had John Anderson in the lab a week ago, one of the world's strongest men, a bodybuilder. We had Ian Clark, a gentleman who was described at the age of 46 that he had 3 years to live. He joined me in the lab at 65 and he's still going strong. What's my point, nation? We bring all kinds. Every human being that walks this lab is an exceptional human being that I'm very privileged and fortunate to bring their stories to you. So I hope you'll keep joining me as we go down this journey of welcoming awesome humans into the lab, as well as our morning show. Mornings in the lab with myself and Nicole. So I'll see you tomorrow. I will be in the lab at 7 a.m. Central, 8 o'clock Eastern. I'm just pulling up the old calendar, Melissa, so I don't make sure I got the wrong names out for tomorrow. Corey Quinn's joining us. He's got a book. He's launching his book. And Lori Hybe is joining us as well. So join me and Nicole for 12 morning conversation, mornings in the lab. You know where to find us, Monday to Friday, LinkedIn, X, YouTube, all the platforms. We're just like your comfortable morning show. Wake up, grab your coffee, tune us in. You'll get caught up on what's going on in the world. You'll get motivated. You'll be held accountable. You'll be inspired, and your day is going to be awesome after tuning in with us. And then you come back in at noon, 1 o'clock Eastern time. Maybe you're sitting at your desk. You're like, fuck, I'm bored. Well, come tune in. Come here. Come see who's in the lab. I'm going to get out of here. I'm going to go walk Kieran out of the door, and I will see you guys. You know where I'll see you. I'll see you tomorrow. Let me find this here. Boop.